हेलो फ्रेंड्स, आई वेलकम यू टू द टेक्स्ट ब्लूप्रिंट। द टेक्स्ट ब्लूप्रिंट में आपका स्वागत है। टुडे वी आर गोइंग टू डिस्कस एन इम्पॉर्टेंट टॉपिक which is long term capital gain arises on transfer of land and building. Today we are going to discuss the provision amended by Finance Act 2 2024 related to the capital gain arising on long term capital assets being land and building or both. आज हम फाइनेंस 2 एक्ट 2024 की वजह से लैंड एंड बिल्डिंग से आने वाले कैपिटल गेन में क्या चेंजेस आए हैं, उसका आपकी कंपटीशन पे क्या इफेक्ट पड़ेगा, आपकी टैक्स लाइबिलिटी पे क्या इम्पेक्ट पड़ेगा, वो डिस्कस करने जा रहे हैं। Although government announced that we are reintroducing the indexation benefit, but it was not completely truth. It is not working as they said. Indexation benefit was reintroduced only for the purpose of calculating tax liability, not for carry forward of loss arising due to the indexation, not for any other purposes. Meaning thereby, if we will calculate the long-term capital gain by taking the indexation benefit, and our index cost of acquisition is more than the sale consideration, in old days it is considered a long-term loss, and that long-term loss was allowed to be carried forward. But by introduction of new provisions, amendment in Finance 2 Act 2024, the any loss arising due to indexation benefit. Again, I am repeating it. Any loss arising due to indexation benefits shall not be carried forward. It is not allowed to carry forward. It is only for the purpose of calculating the long-term capital gain. So we are going ahead now. Section 112 deals with the long-term capital gain. Section 112, subsection 1, clause A says, in the case of individual or HUF being a resident, individual HUF being resident, the amount of income tax payable on the total income as reduced by amount of such long-term capital gain had the total income so reduced been his total income. Meaning thereby, it's simple, in simple word, if your total income is 20 lakh and it includes 10 lakh rupees LTCG, it includes 10 lakh rupees long-term capital gain. Then before calculating the tax, you have to reduce this LTCG. It means your total income other than this special income will come to 20 lakh minus 10 lakh. On this 10 lakh, you will calculate the tax as per normal slab rate. As per normal slab rate. On this capital gain, you have to calculate tax at special rate. LTCG पे स्पेशल रेट से टैक्स कैलकुलेट करना है. नाउ वी आर गोइंग फॉरवर्ड. 112 subsection 1 clause A subclause 2. Subclause 2 says the amount of income tax calculated on such long-term capital gain. Such long-term gain means this 10 lakh. इस 10 लाख पे टैक्स कैलकुलेट करना है एज गिवन हेयर अंडर. A, the rate of 20% on if this long-term capital gain is arising due to any asset transferred before 23rd July, then the long-term capital gain shall be taxed at the rate of 20%. If the transfer after 23rd July, then tax rate will be 12.5%. This is the important provision. This is the important change in Finance 2 Act 2024. मीनिंग thereby, अगर कैपिटल एसेट्स 23 जुलाई 2024 से पहले ट्रांसफर हुई है तो टैक्स रेट 20% होगा. यानी कि एज पर ओल्ड प्रोविजन योर इंडेक्सेशन इज आल्सो अलाउड. अगर कैपिटल एसेट 23 जुलाई 2024 के बाद ट्रांसफर हुई है, then your tax rate will be at the rate 12.5% instead of 20%. 20% की जगह 12.5% टैक्स रेट होगा. we came to know that how there are two tax rates are applicable on capital gain arising before 23rd July, after 23rd July. The first proviso of this provision is not so important. It's nothing saying about the new change. The second proviso is most important. It is really tricky, and it is actually impacting your income and your total tax liability too. So we are going the plain language of the act. What act says, provided further that in case of transfer of long-term capital asset being land and building, remember it should be long-term capital asset and it should be land and building. और हम जहां से हमने स्टार्ट करा था वहीं से हम पढ़ते हुए आ रहे हैं, ऑल दीज प्रोविजन आर एप्लीकेबल फॉर इंडिविजुअल एंड एचयूएफ, तो वो भी ध्यान रखना है. बीइंग लैंड एंड बिल्डिंग और बोथ विच purchased or acquired before 23rd July, where income tax computed under B. Under B means this is B means at the rate of 12.5%, exceed the income tax computed in accordance with provision of this act as they stood immediately before the amendment. Means before the amendment was, this was the clause A. Yeah, before the amendment the rate was 20%. After amendment this rate is 12.5%. It says arising any excess tax arising due to the tax rate calculated at the rate 12.5%, the such excess shall be ignored. This was the new amendment, and everyone was happy. Okay, indexation has been restored. Our capital gain tax liability will be ignored. If second proviso is most important, it is what it says. It says we have to calculate the tax liability as per clause B. That is, your tax liability shall be 12.5% on the capital gain without indexation. Can kindly make a note, indexation on land and building has on any long-term capital asset has been removed with by virtue of Finance 2 Act 2024. So we have to calculate the long-term capital gain by sale consideration. Sale consideration means net sale consideration. Sale consideration minus cost of transfer is called net sale consideration, minus cost of acquisition. Before this amendment, the word was index cost of acquisition. Now it is the cost of acquisition. The capital gain will arise and the amount will be taxed at the rate of 12.5%. For this example, we sold an asset, land and building at 80 lakh and the cost of acquisition was 60 lakh. My capital gain arrived to by new provision 20 lakh rupees. This 20 lakh rupees shall be taxed at the rate of 12.5%, that is 2.5 lakh rupees. My tax liability is 2.5 lakh. This is my tax liability by virtue of new provision. But the last line says exceed income tax computed in accordance with provision of this act. This act means Finance 2 Act, Finance number 2 Act 2024. They stood immediately before amendment. Now we have to recalculate our capital gain as there was no amendment taken place. In the old provision, what we do, we calculate our capital gain like this: net sale consideration, again I am saying sale consideration minus cost of transfer is a net sale consideration, minus index cost of acquisition. The index cost of acquisition, how to calculate, will let you know in few minutes. My cost of acquisition, index cost of acquisition now arrived to 1 crore 47 lakh 16,216, and my sale consideration 18 lakh. My net long term loss is 67 lakh 16,260 16. In old days, this loss was allowed to be carried forward. Since the indexation is completely abolished, then no question arises to carry forward this loss, because this loss is only for computing the tax liability. After the indexation, tax will be at the rate 20%. Since there is a loss, the tax liability will be zero. What Now we are coming again to the proviso, second proviso, which says the excess tax shall be ignored. My tax with old provision is nil. My tax with the new provision is 2.5 lakh. This is, it means my tax liability is exceeding the old provision, 2.5 lakh rupees tax liability, exceeding the tax liability as arrived in old provision. पुराने प्रोविजन में मेरा टैक्स लाइबिलिटी जीरो है, नए से मेरा 2.5 लाख रुपए आ रहा है, that it complete 2.5 lakh will be ignored. My tax liability on this capital gain transaction is nil. तो मेरी कोई टैक्स लाइबिलिटी नहीं बनेगी. बट देयर इज ए कैच. इन केस ऑफ लॉस यू सेल बी लायबल टू टैक्स ऑल्सो. आपको लॉस होने के बाद भी टैक्स देना पड़ सकता है, क्योंकि ये प्रोवाइजो में ट्रिक है. ट्रिक मैं बताता हूँ आपको क्या चीज़ है वो. देखिए, हमने अभी पीछे एग्जाम्पल में देखा, बाय virtue ऑफ सेकंड प्रोवाइजो एनी एक्सेस टैक्स which is more than the tax liability as per the index cost capital gain shall be ignored. But what it is actually happening, capital gain, due to the capital gain loss, my tax liability is zero on the capital gain, particular capital gain. But now I am going to give you a complete new scenario. Let assume Mr. A is an individual. Income we are calculating for financial year 2024-25. His other income is, his salary income is 25 lakh rupees. Standard deduction 75. Net taxable salary income is 20 lakh, 24 lakh 25,000. Now I am creating a two parallel scenario. Other, he has a capital gain income, another capital gain income is zero. So now we are looking both parallelly. See, we are taking an example. A transfer took place after 23rd July. Computation of capital gain will be as per clause B of 112(1)(a) clause B. Net sale consideration was 65 lakh. Date of transfer was 31st December. Cost of acquisition, asset purchased on 10th January 2026, it was 30 lakh. My capital gain is 35 lakh, and tax shall be calculated at the rate 12.5% as we did in our earlier example. My tax liability arising at 4 lakh 37,500. Again, I'll calculate the tax as per provisions. Old provision allows me to reduce the cost by indexation benefit. What is the indexation benefit? Let us move. Indexation benefit is, it's just a unitary method. Indexation is nothing, just to adjust the cost with the inflation index. The inflation number CII, cost inflation index number, is provided by income tax act. How to calculate index cost of acquisition? It is cost of acquisition divided by CII of year of the purchase, because we have to apply unitary method. कॉस्ट को उसकी डेट ऑफ परचेज के CII से डिवाइड करना है और डेट ऑफ सेल के CII से मल्टीप्लाई करना है. इन आवर केस व्हाट वी डिड, हमने इस अपनी कॉस्ट को, K30 इज माई कॉस्ट को मैंने CII 117 परचेज के CII से डिवाइड करा, मल्टीप्लाइड बाय सेल के CII, क्योंकि मुझे इसके इन्फ्लेशन को बढ़ाना है तो मुझे CII ऑफ द ईयर ऑफ ट्रांसफर से मल्टीप्लाई कर दिया. माय परचेज कॉस्ट केम टू My purchase cost arrived at 93 lakh 7,692, while without indexation my original cost was 30 lakh. It is 30 lakh. But indexation was allowed in old regime, previous provisions, not old regime, previous provisions. And index cost of improvement, if we have done any new structure renovation or improvement in the property, we can deduct it also. We buy in benefit of indexation too. We did improvement in 1st April 2022 and improvement cost was 10 lakh. Effect of indexation, my improvement cost which was originally 10 lakh now arrived to 10 lakh 96,677. My total cost minus sales consideration, it is a loss. My loss due to indexation, cost of improvement and indexation in cost of acquisition is 39 lakh 4,369. This is my loss. And due to loss, there is no tax. Definitely, the what the provision second proviso says, excess tax shall be excess tax shall be ignored. Here is a loss, here is a profit, and my tax liability as per old provision is zero, and tax as per new provision is 4,37,500. The entire tax shall be ignored. Okay, fine. I did not get any tax burden, but it has another implication on my income. See, when there is no capital gain in my income is 24 lakh 25,000 only. But when there is a capital gain, my income will 24 lakh 25,000 salary income, capital gain without indexation as per new provisions will be added to my total income, gross total income. Now my total income arrived to 59 lakhs 25,000. The tax will be at the time of calculating tax, my tax will be calculated only on this salary income, not on this income, because this tax has been ignored. What second proviso says. But what it is doing my increasing my total income, and my total income arrived and gone exceeding 50 lakh. मेरी टोटल इनकम 50 लाख से बढ़ गई है ड्यू टू द एडिशन ऑफ दिस कैपिटल गेन, मींस meaning thereby the capital gain as per new provision shall be added to my total income, gross total income, and if any deduction is allowed, reducing the deduction, then you will come to the total income. My total income is increased by due to this 35 lakh, and it is going to 59 lakh 25,000. मेरी total income 59 lakh 25,000 हो गई. अब because my income exceeds 50 lakh, I have to pay surcharge at the rate of 10%. मुझे 10% का surcharge pay करना पड़ेगा on my total tax liability. My tax liability is 4 lakh 17,500, which was earlier also on this income only. Since there is no capital gain here and my income is not exceeding the 50 lakhs, so my tax liability will be same. No surcharge is applicable. But due to this 35 lakhs, my total income exceeds to 50 lakhs. So I have to pay surcharge at the rate 10% also, and my total tax liability will come to 4 lakh 59,000, and accordingly cess will be charged thereupon. My total tax liability is 4 lakh 77,000, which is 43,420 extra from this. Although the tax liability is ignored on long-term capital gain, but surcharge will be applicable because my total income slab is exceeding. So this was the impact of the new tax provision on the long-term capital gain. It is increasing my taxable income slab, and accordingly tax surcharge will be payable to me. If you will compare with the old provision, I do have a long-term capital loss. Still, I have to pay extra tax of rupees 43,000 rupees. The same if I'll add the previous example capital gain where my capital gain was 20 lakh. My capital gain income and salary income is below 50 lakh, then no impact will come on my tax liability. So this is the trick. This is the problem with the new provisions. Thanks for watching the tax blueprint. Please share your feedback and share the video to others also. Thanks. Thanks, regard.